Welcome to the daily insights that matter. Now, the tides are turning in the Indian stock market as domestic investors show a growing interest in owning a piece of the pie. Now, according to recent data from Prime Database, domestic investors now own over 25% of the companies listed on the National Stock Exchange, up from 18% in March 2015, marking the first time that they've breached this milestone. Now, the DII shareholding at the end of March 2023 quarter stood at 16.35%, up from 15.32% in the preceding quarter. Meanwhile, foreign portfolio investors saw a modest increase in their shareholdings. Notably, the gap between the foreign portfolio investors and the domestic institutional investors has also narrowed to an all-time low, indicating a shift in investment confidence towards Indian companies. According to Prime Database, domestic institutional investors' holding is only 20.46% lower than the foreign portfolio investors' holdings as of the latest update. Now, in December 2022, the DII holding was at 24.3% lower than the FPI holdings, and the widest gap between the two was in the month of March 2015 at 55.45%. Now, the recent trend shows us that domestic investors are becoming a force to be reckoned with in the Indian stock market. The increase in ownership by domestic investors could have an impact on the Indian markets. Firstly, it could result in more stable and long-term investments in Indian companies, which could positively impact the growth of these companies. Now, this could in turn lead to increased investor confidence and interest from foreign investors as well. Also, the narrowing gap between foreign portfolio investors and domestic institutional investors could mean that the Indian markets are becoming less dependent on foreign investment flows. This could make the markets more resilient to external shocks, such as global economic downturns, which we are witnessing currently. Now, the latest data published by FADA for the month of April 2023 has revealed some interesting trends in the Indian automobile industry. While the overall vehicle retail saw a decline of 4%, there were some surprising shifts in the individual segments. The two-wheeler and the passenger vehicle segments continued to face challenges with a decline of 7% and 1% respectively. Now, this is particularly concerning for the two-wheeler segment, which has been struggling since the outbreak of COVID-19. In fact, sales in this segment were still down by a staggering 19% compared to the pre-pandemic levels of April 2019. However, there were some bright spots in the data as well. The three-wheeler segment saw a remarkable growth of 57%, driven by the high demand for e-rickshaws and passenger segments. Now, this is a great development as it not only signals a shift towards more sustainable and eco-friendly modes of transportation, but also presents an opportunity for the sector to create more jobs and drive economic growth. Now, the tractors and commercial vehicles also saw a modest growth of 1% and 2% respectively. Now, after achieving record sales in FY23, the passenger vehicle segment experienced a decline for the first time in 8 months. Now, a part of this can be attributed to the high base from the previous year and the implementation of the OBD2A norms. Now, the OBD2A is a set of regulations implemented by the Indian government to reduce vehicular pollution. While this step is a positive step towards sustainability and eco-friendly transportation, it also resulted in an increase in the vehicle prices, which prompted advance purchases in March and contributed to the decline in sales in April. Now, in addition to this, unfavorable weather conditions such as untimely rains and hailstorms caused a lot of crop damage in several states in April. This impacted farmer concerns and had a ripple effect on entry-level two-wheeler and passenger car sales. However, with the upcoming marriage season in May, there is hope for a resurgence in the sales of two-wheelers and passenger vehicles, driven by an increase in customer inquiries. Additionally, more and more customers are increasingly considering transitioning from the traditional internal combustion engines to electric vehicles, and this may temporarily delay the purchasing decisions for the traditional internal combustion engine vehicles as customers explore the growing popularity and benefits of EVs. Overall, the FADA data highlights the complex and dynamic nature of the Indian automobile industry as FADA maintains a cautious stance for the sales in May 2023. So what does all of this news mean for you? There is evidently a growing trend of domestic investors showing interest and confidence for investing in the Indian companies. This will have a direct positive impact on you. Now, the April auto sales data presents a mixed bag of results for the Indian automobile industry. While the upcoming marriage season in May is expected to bring about a sales resurgence, the unfavorable weather conditions pose a threat to the two-wheeler and the PV segment collectively. This will therefore have an indirect neutral impact on you for time being. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.